This is WPSL Port St. Lucie, the talk of the Treasure Coast.
It is 10:07 at WPSL 1590, the talk of the Treasure Coast. Time for Money Info with Mike King in Las Vegas and Charles Moskowitz in Boston. Good morning, guys.
Morning.
Michael, thought a lot about you with all hell breaking loose in your hometown.
Yeah, it's a real tragedy.
How close were you to all that?
Well, fortunately, we were nowhere near the Strip, as a matter of fact. I'm several miles east.
That's good.
2 miles east of the Strip. So we weren't anywhere close to the interaction and the concert.
And Mike doesn't go to a lot of late night concerts either.
That's right. We're asleep because we get up so early.
I was going to say, I think we're all kind of in that vein right now.
Well, we get up early to evaluate the markets.
There you go. Yeah.
After all, we're 3 hours behind here in Vegas. So it's tough to compete with Charles.
Well, what's interesting, Michael, is, of course, Tim Connolly was talking about this right after the hurricane in Houston about what's going to happen to auto sales. Holy smokes, GM and Ford are going through the roof right now. It's in new car and new truck sales. It's amazing. Yeah. Wow. So I was looking on CNBC, Michael, and one of the doomsayers is saying that the bull is over. The bear is coming. Of course, we always seem to hear that.
Well, there's absolutely. I don't see a sign of that. We might ask Charles, who's a technical expert, but I certainly don't see a warning sign yet. Do you, Charles?
Nope, I do not. The advanced decline line is up. I think I heard on CNBC this morning they were talking about sell in May and go away. Didn't work. Market will be slow and choppy during the summer. Didn't work. September, one of the worst months of the year, didn't work. And so now this is October. October is the scariest month because we've had several major breaks during October. October 19th, October 29th, there are a whole bunch of things. And the market just doesn't care. In fact, the market didn't care about what happened in Las Vegas, which amazed me, because that's almost always a concern, especially when you have a city whose economy is based on 43 million visitors a year. And that didn't seem to hurt. It didn't even seem to hurt any of the travel booking sites. Expedia. It didn't hit Expedia. It didn't hit Priceline. This is not the stuff that tops are made of. The advanced decline daily, the market internals, continues to be up, but not excessive. I mean, if I came in tomorrow and saw the market up 150 like it was yesterday, with the advanced declines of 5, 6, 7 to 1 advances over decliners, or advancing volume over declining volume, that would scare me. But yesterday we were basically healthy, 2 to 1 up in volume on the NYSE, 2.5 to 1 on the Nasdaq, and the advanced declines were 8 to 5, I think, or 9 to 5, I think, on the Dow, and a little bit better than that on the Nasdaq. So, you don't have a lot of excesses here. The volume isn't explosive. The moves are not even explosive. I mean, look at everything was higher yesterday, and so what? Up 150 on the Dow is less than 1%. That's a normal day, or it has been in this market. But there's usually something that happens to cause the top, and I just don't see it. Also, the sentiment numbers. If you look at the market letter where Mike does the market lab, you still have, last week I think the bulls were down almost 5% to 30% of the market. The long-term average of that is 38.3, so it's well below that. And you just don't have the excesses that we've had in the past. So while I don't subscribe to the "this time it's different" idea in general, so far so good.
Yeah, it's really interesting. One would think that, especially the Las Vegas thing being what it was, I mean, just so huge, that something would have reacted out of that.
Yeah, but the thing was when the futures were open that night and the following morning, there was no excessive move in the futures, and they didn't have the information of who the guy was or if he had any affiliation with any groups or the market just didn't care.
Good point. Good analysis.
That's amazing. Wow. Yeah. Well, the one thing that I have to say, Mike, and having lived through the San Francisco earthquake as I did, and report on that, your emergency folks in Las Vegas are simply amazing. I mean, it just everything came together in perfect fashion, and I thought that was really, really amazing. And I know the sheriff was talking about that yesterday. About even
and who knew that there were 5 hospitals within 10 minutes of there where it happened. I mean, they were talking about taking injured
Let's
survivors.
welcome Tim Connolly.
Good morning, gentlemen.
Hey, Tim.
Hey, I apologize for being late. Ever since the hurricane, we have phone problems around here, and it was not letting me dial in the passcode, so I just decided to use my cell phone, and as Mike knows, I don't like doing that on live radio shows, so if I lose a signal, I'll apologize in advance.
Well, that's all right. You independent Texans, I mean, you just have your own clock now.
Yeah. I'm big on people being late.
Yeah. Hey, Tim, we were talking about you in front of your back, by the way, where I think it was a discussion with Tim Connolly immediately following the hurricane that car and truck units would go out of sight. And we have 12% growth for GM fleet sales. Chevy's up 17%. Truck deliveries up 10%. Crossover vehicles up 43%. And Ford has almost got the same numbers. I mean, it's I'm sure a lot of that is you guys in the Harvey situation, right?
They estimate, the last number that I saw, 400,000 vehicle loss. cost.
Oh, God.
And,
Oh.
and one of the things that's driving all this is in Ike back in 2008, flooded vehicles, the insurance companies required greater proof of flooding, and they wouldn't total the vehicles. And what happened was a lot of those vehicles ended up into the market. Then buyers who were not disclosed that they were flooded ended up suing everybody in the chain of title, including the insurance companies. What they are choosing to do now, which is amazing, I can't believe it, Allstate did it first. If you had any water whatsoever in the carpet of your vehicle, they totaled it.
Yeah.
And the other...
And they took them, didn't they?
Oh, yeah, absolutely.
They're
they
taking
take them,
them.
and
They're
taking them and they're crushing them.
Yeah.
They're taking out the parts.
That's a big difference.
And they're crushing them. And I think that is really good corporate policy, and Allstate deserves kudos for it. And I think because they did it, now everybody else is doing it.
Yeah, wow, that's amazing that everybody has followed Allstate's lead on that. It was funny. We were joking at the Lexus dealership here, and they were saying what's going to be interesting in a couple of years is to look at auto parts stock with all of these cars being crushed.
Yep, you're right. You're right.
Wow, yeah.
You know what? It's better than a few years ago. And in fact, I'm sure it's the attorneys back in Ike when it happened made literally hundreds of millions of dollars suing insurance companies on bad faith claims adjustments. And this time around, that's not happening. I mean, they're paying the claims quickly if it's covered, and if it's not covered, unfortunately, 70% of the homes that were flooded out in Houston anyway were not covered by flood insurance. And that's just foolhardy. The average flood insurance policy is $600 a year. And people need to understand, for $600 a year, you should buy it even if you're not in a flood zone. In fact, now the big move, our county is looking at making flood insurance required for 500-year floodplain rather than 100-year, simply because they've all changed and the feds are too slow to reassess the floodplains.
Wow, that's shocking. Now, I was watching. I think it was CBS News. It was talking about how a lot of Houston, when it was exploding, back in the huge oil days, that a lot of the housing was built in floodplains. Is that true or not?
No, that is true. That is true. And people, in some cases, some people were smart enough to build their houses up higher. In other cases, they weren't. I have a friend of mine who I'm actually closing on a refinancing of his fabrication plant this week, and this guy had 10 feet of water in his house, a $4 million home, and he didn't have anything beyond $250,000 in flood insurance.
You've got to be kidding.
No, I couldn't believe it. Here's a successful, smart guy and didn't buy any backup policy. I've got Allstate as my insurance, and I have $400,000 in additional insurance beyond the FEMA insurance. You have to have FEMA first, but then if my house got wiped out and FEMA didn't cover it with $250,000, which it would not, then I've got another $400,000 to cover my improvements on top of that, and it's like $1,800 a year. So people have got to be looking at that in Florida too. Now, I understand from my friends in Florida that you get $500,000 as your limit from FEMA versus Texas at $250,000. That sounds to me like better politics in Florida.
Well, it's maybe nicer homes in Florida. No, I'm just kidding.
Yeah, but at the same time, and you may be right, but at the same time, they have more of a history of having the problem there.
Yeah,
that's true. I mean, we certainly have had our hurricanes in Texas, but Florida just had a period of years there that was horrible.
Well, and what's weird, really weird, guys, is a dear attorney friend who was actually in here doing a show the other night. He's got a house up in Jacksonville, and it's right on the St. Johns River, and that river and people just have no idea, it is still over crest or whatever you say, crested over or whatever, and and it's 9 inches above what it was during the hurricane.
Oh, yeah. No, I'm looking at the bio. This is the first day I am able to get back in my building since the hurricane.
Wow.
And I'm looking at the bio that is the one that was written up everywhere called Buffalo Bio, and it's where all those dams pour into. It's still flooded over its banks because they've got so much upstream flooding in these dams that they're releasing so many acre feet a day. But I'm looking at it. So the same thing's happening here, exact same thing.
Well, and, of course, the big concern here for our hurricane is Lake Okeechobee going to hold? I mean, there's some pretty large cracks in that lake on the south side. And, I mean, you see all the development in the Miami area out around Kendall where we go to play Miami-Dade, West Broward, that whole area. You've got 5 million people down there that could be conceivably affected, as well as all the people in the Glades, if something major happens to that lake as we had at Lake Pontchartrain.
Yeah, that's funny. When you think about that would be a serious problem. I mean,
oh, yeah.
It's not laughable funny.
No.
It's just people just adjust to their lives and think everything is going to stay the same. And you're right, Lake Pontchartrain, that was a just enormous mess. And, of course, that's the biggest reason that FEMA is, I hesitate to use the term, underwater by $24 billion before these claims, was 16 or 18 billion of it went to New Orleans.
Sure.
They got unbelievable dollars from the hurricane.
Well,
so it's
the very interesting thing, and, I know we've had the discussion about, the federal government a lot, is I remember when we had the Olympic Festival in Baton Rouge and New Orleans on ESPN, and that was in 1983. It was, and there was a huge article in the Picayune newspaper in New Orleans about Lake Pontchartrain, and how they've been talking about improving Lake Pontchartrain since the late 40s. And nothing really had been done. And you think, my God, then and all of a sudden, fast forward, major hurricane hits New Orleans, and guess what fails? Pontchartrain. And
right.
You figure that they had known that for almost 60 years. That's unbelievable. But that's the same thing that we're dealing with here in Florida. Could it happen again? We don't know.
It could happen again this season.
Actually, you're right. I mean, we still,
Season's only half over.
I know. That's what's so amazing. I mean, I got to go to the transmitter in Port St. Lucie. We've got, I don't know, $25,000, $30,000 damage there. And, which is minor in the whole scope of stuff. And it's all insured. So, you just think, oh, my. Yeah. And we are only half over. And actually, we're being hit with a tropical thing that just started, and just pouring rain is this morning. Amazing. Yeah, you're right. We're only halfway through hurricane season.
Well, and some of our very worst storms have been in October.
Yes, you're right. You're right.
We've gotten fortunate. We've already gotten a little cool weather in Houston and a little high moving out into the Gulf. So the storms are now turning back up towards you again these days. But
thanks.
That doesn't give us insurance for the whole month.
Yeah. So now, are you back pretty much oil-wise? I mean, are all the pumping
Everybody's
areas?
back at work. I did have a very, very interesting meeting. The World Oil Council has their biggest annual meeting of oil companies and of investment funds is held in Houston each year. It's Houston, London. There's one in South America, but Houston is far and away the biggest one. And it was 2 weeks ago here. And the tenor of the conference was very somber. The capital markets are already starting to tighten up for the mid-tier companies. The big companies have access to as much capital as they need, and the big funds are now investing in the midstream and downstream, but they're not putting a lot of new money upstream to the smaller companies. And the general gist of the whole conference was the small independent is toast. And even the mid-tier guys are having trouble attracting capital because there's just so much production capability out there. We're finally starting to see the pullback. You know, we're seeing a few rigs laid down, but we did see production get to where we thought it would be. The Permian Basin hit 2.5 million barrels in August. And, you know, there's just plenty of oil out there. And every time it gets above 50 like this, my friends at Cargill tell me they get flooded with sell orders, and their quotes on puts drop below $50, and they don't want to go there. They said every time they price a put at $50, they just get absolutely murdered with sell orders. So the market's learning to live with 50 or less, and everybody's still producing that can produce. But I think you're going to be seeing less new projects started.
See, I have a problem with, quote, the oil story. I just don't believe it. And this really bright guy that I spoke to a couple of weeks ago made the point that in this environment, it's going to be the people who have the best lifting costs.
Correct.
As opposed
That's what
to,
the conference was all about.
Yeah. And it's you that I'm quoting from 6 months ago.
Oh.
Talking about the survivors will be the ones who operate economically, who can live with $45 or $50 a barrel. And my attitude is that, again, I don't believe the long-term story right now. Haven't for a while. And every time we get to 53, 54, I buy the SCO. That is the 2-to-1 or 3-to-1.
3-to-1. 3-to-1. I love
3-to-1 inverse ETF. And every
You
time
bet.
it gets back down to, 40, 47, 46, in that area, I sell it and I leave a little for the next guy. And sometimes it goes to, 42, 43, and sometimes it doesn't. Sometimes it goes, straight back up into the 50s. So it's a trading market as far as I'm concerned. And until
and I love it. It's like
changes,
shooting fish in a barrel. I did it yesterday.
And it's, yesterday's move, according to many of the talking heads that I saw, was all about OPEC cheating, as they always do, and our ability to produce much higher, as clearly it is. I remember not that many years ago when if it got foggy in the Houston Ship Channel, oil went up $2.50. And now the market.
Come on, Charles. Charles.
Ask Tim, he'll tell you.
That's true because
It
people
is
saw it
absolutely
as an
true.
interruption of ability to ship. You bet.
Yeah.
You've got to be
And of
kidding.
course, they were all talking about, we're shutting down these refineries, and it could take a month to get them back up and running. Well, that didn't happen either. They shut a bunch of them down, and they've turned a bunch of them back on. And it's only
I
been
think
a
we've got
couple of weeks.
everything. There's only 3 refineries that are still down now. So, we're back to virtually full production, and of course we're coming to the slower driving time of the year. So, demand for refined products will not be as great, at least in the gasolines.
And the less expensive blend too.
Exactly. So once again, if you're smart and you play these patterns, you're going to make money. If people will just, history does in fact repeat itself. But I'm just curious as to what you guys think. Now, I do have a new term for you from the World Oil Council.
Okay.
This came from one of the companies that was talking about this exact issue. There was one entire panel on technology and efficiency and lifting costs, and they're calling it the manufacturing business.
Oh.
Oil Oil is now the manufacturing business.
I love it.
You've got to be the most efficient manufacturer out there. And they had 5 experts, and there were about 200 people in the room. And at the end of that panel, when they talked about how much it took to play the technology game and how meaningful it was going to be in the future, there were no questions. The audience was just stunned.
Right.
Because there were a lot of independent oil men there, and they left the room going, what the hell am I going to do next?
Right.
Wow.
So, if you're going to invest in the ones that have the access, the capital for technology, and play the dividends and write covered calls. Yeah. Because the days of these small independents and suddenly are going to hit a major well and everybody's going to, be rich as Croesus, that's just not going to happen anymore because the capital markets won't fund it. Yeah, occasionally there will be a lottery winner, but the capital markets really and truly are closed to the small independents. It's so difficult to get.
Tim, who are you mentioned medium-sized oil companies. Who are they? Do we know who they are?
You know what? The only reason I can't answer that now is because I am subject to a non-disclosure from that meeting.
Oops. Okay.
And I would be mentioning.
Okay.
I can give you general stuff right now, but you only get to this meeting by appointment. By invitation, and you have to sign that you will not do any specific disclosures to the media
Gotcha.
Of company discussions. But I can tell you, you guys can figure it out. These are the ones that are underneath the big players, and you can look at them, and the easiest way is just see who's the biggest company that can't raise capital. That's probably a mid-tier company.
Okay.
And they were raising capital last year. Last year they were able to. This year the investor fatigue has hit the oil business. And the big investment community thinks there's just enough money and enough production capacity out there with the Anadarkos and the Apaches and the Exxons and the, all of the well-known names. And so I think we're going to see more asset sales and fewer companies by next year at this time, for sure. Absolutely.
Anadarko has such a great portfolio of properties.
Yep.
So that's always been a favorite of mine. Even if they just started, you may start to see some roll-ups.
Absolutely.
You may get back to the it's cheaper to drill for oil on Wall Street than in the fields again.
What about
morning, gentlemen? Andy joining you.
Hey, Andy. Another question as far as instability in Venezuela. Is that going to affect your industry all that much, or is it a major player? No. Okay.
It's a non-event because all the majors quit working there almost a year ago. They owe them billions. Nobody's providing them with any services, and they're just dead in the water. If they were in the market, prices would be worse.
Yeah.
Really? Okay.
And more supply.
Oh, there you go.
More
Yeah.
supply.
Yeah. Wow. Amazing.
Well, I hear you have another guest here.
That we do.
Andy Silfon, RMS Medical Products.
Yep. One final question, Tim. You're back in your building for the first time since the hurricane. Now, are you going to stay there? Is mold a real problem?
Well, mold does not appear to be a problem, but I'm also going to have my own testing done. The repairs are not completed, but they've let us come back to the building. But I'm on the 4th floor, and for instance, there are no elevators that serve the building yet. The elevators were flooded, and the parts are so hard to get from so many buildings being flooded that you can't get elevator parts timely.
Ooh.
So we're all schlepping up 4 floors every day. And next door to me is my doctor with a very formally successful practice. He's going to love it when he gets here today and finds out all of his patients have to walk up 4 floors. The answer is I don't know if I'll stay here or not. I love it here. I love being able to overlook the bio, and I certainly love being in the Galleria in Houston. So no matter what, I will still be in my home of Houston, Texas, and looking forward to talking to you guys whenever possible.
Thank you for your time.
Thanks,
Right,
Tim. Thank you, and Boy, stay safe. Well, one good thing, I mean, if you pick up the pace a little bit going up the stairs, you may lose some weight.
By the way, I do have one question to ask everybody, and I'm going to get off, and it applies to your new guest, too. I want to know next week everybody's guess of when Rex Tillerson's resigning. I'm betting by year end, so I want to put together a pool on date.
I think it's going to be a lot quicker than that.
Have a fun
He's a
show.
tough guy, though. He may stay on this.
What, just to spite Trump?
He's a tough guy.
Oh,
well,
man.
Welcome, Andy. Are you getting ready to come to Las
Thanks,
Vegas?
Tim.
I'm trying. I'm really tight on time today, so I'm sorry. I'm not going to be able to stay with you very long.
That's okay, Andy. So what's going on with RMS?
Well, I don't know whether you've been made aware. We have a new clearance from the FDA. It's a landmark clearance. It's an updated, comprehensive clearance for our products in the entire infusion area. There was some issues that had been raised in the past about how our products were cleared, and we believe that our clearances were absolutely valid and correct for the uses intended, but we filed a voluntary 510K FDA submission, and now we have what is a landmark clearance. It's the first time that the FDA has ever cleared as comprehensively and as completely as the clearance we now have. And it's expressly for the infusion system, the Freedom, for use with intravenous antibiotics and subcutaneous immunoglobulins and our entire system. And it's the first time that FDA has actually recognized what it is that we do, a constant pressure syringe driver, and everything in the fluid path to control the flow rate. The benefit to patients is that the patients are ensured that they're getting a consistent and repeatable flow rate so that we can titrate the administration so that the patient gets a fantastic outcome. Our goal is great patient outcome. And it's our philosophy that if we stay patient-focused and we do the best for our patients, we will do the best for our company and we will do the best for our shareholders. And so that's, in a nutshell, what we're about. And we're really pleased that the FDA now recognizes and accepts the science behind this system, how it works, how it functions, what it does, and how we can explain it to patients and to healthcare professionals.
Andy, is this what you were talking about like 7 or 8 years ago that you had applied
we had
for
actually
all this?
submitted. Yeah, we had actually submitted that clearance in 2000. I think it was 2008.
Yeah.
So it's been a work in process. Absolutely.
Wow.
But, we're very excited to have this bulletproof clearance now. It's comprehensive. It's integrated, catch up. It consolidates all the changes and updates, and it just assures us our rightful position in the marketplace. So it's really good news. I mean, it's fantastic. It's also managed to, with that clearance, since there is no dispute, we're able to move ahead with our Asian markets, our international markets. We have clinical trials going on all over the world. We have a lot of drug companies calling on us. So, things are moving quite well. And, we think that we're going to do very well in the future.
I just can't imagine it takes 10 years to do anything at the federal level. I mean,
well, it was on and off. I mean, that
but still,
2008 did not go through. We've had a number of correspondences with the FDA on this issue. But the FDA now, I think, understands their own definition of what is an infusion pump and what we do and how we work. Remember that our device, our Freedom line, is non-electric. It's doing some incredible things in a mechanical system to protect the patient. One of the things it does is if the patient has a problem getting the delivery, either intravenous or subcutaneous, the system, the physics of it, senses appropriately and reduces the flow rate. And so it's sensitive to what's going on in the patient, which no other system can do. And now we have that this is now recognized. And so all of the things that we have been talking about, a system for immunoglobulins, everything in the fluid path, getting consistent and repeatable infusions, these are all the huge benefits that we offer in our system that no electric can do, no other mechanical can do. And so now we have a chance to really go at the market and promote it. So we're pleased as punch. I have another meeting coming up real fast.
Okay,
There's not another question. I'm afraid I have to run.
Okay, Charles, anything else for Andy? I know he's got to run here. Okay.
Thanks so much,
Thanks,
and we
everyone.
look forward to your coming
Alrighty.
to Las Vegas. Andy will be here tomorrow afternoon, right?
That's the plan right now. We'll see. Talk
Good.
later.
Looking
Thanks,
forward
gentlemen.
to it.
Have a great day.
All right, thanks. Andy Sealfon, the president and CEO of RMS Medical. And, wow, some great news from the FDA. Mike, I still can't believe it takes 9 years to get anything done. That's amazing. Absolutely amazing.
Well, it's not like overnight. It's taken them since 2008.
Yeah.
And now they finally got clearance, and they have a great product. There's no question about that.
Yeah, it's truly, truly amazing. Charles, looking at your tea leaves, I mean, it's this, as you mentioned at the top of the show, this market just seems to keep going up and up and up.
Yeah.
I mean, it's amazing. Yeah.
Well, the little guy is still not in yet. I mean, not in
Okay.
big. I think that there's kind of a misconception of who improves their position by the market being like this. And frankly, anybody with a 401k or an IRA or, any kind of investment vehicle makes money in this market. I mean, there just aren't any. And what the market has become recently is much more of a stock picker's market. That's one of the things that I do that takes a monstrous amount of time, which is going through all the charts. And, they just brought out a new ETF for the FANG stocks. Facebook, Apple, Amazon, Netflix, and Google. And even within that group, you still have divergences. For example, Google and Amazon are way down off their highs. But Apple is acting well. So we have some Apple calls that we bought when the stock was around 150. And, 2 days later we had to sell half of them on the 100% up rule, but, we still have that position there. There are a lot of little stocks that most people would never even think about. The one that comes to mind most clearly is the Goldfield, which has nothing to do with gold whatsoever. They happen to be a small company located in Melbourne, Florida, and they do utility upgrades and consumption.
Oh.
We bought it the day before we had, the first storm hit, and paid $4.27 for it. It's a stock that I have actually followed for years and years. And today it's trading, the last is $6.28, and it's down about 7 cents. But, it's strong, but you have to do the homework. And further, from my perspective, I have, a bunch of rules about the way that I handle trading. Since I'm no longer a broker per se, and I don't live by the trades that I make, and start every month again at zero, it kind of frees me up to make only the trades that I see that I like. And if there aren't any, I don't make any. And so that has been very, very helpful. And beyond that, the way that I trade is I buy support, not breakouts. The problem with buying breakouts is, you're hopping on the train as it's moving. You don't exactly know when it's going to stop or where. But if you buy support and you're wrong, you don't really have much of a loss. It's all about mitigating the losing transactions. So I'll give you an example. Mike and I were talking over the weekend this week, and he was interested in a couple of food stocks. And I went through all the food stocks, and, there were several that I wouldn't buy because they were still making new lows. And there were several that I looked at that had made, pretty decent moves. I think Mike brought up Sanderson Foods, which is, really done well, and Tyson, which had news on Friday and was up about $5.50 between the close Friday and the close last night. But those are stocks that I can't buy because they've broken out, and there's no way for me to assess the risk. I mean, if a stock like Tyson goes up $5 and I buy it, then I have a risk that is at least $5, because if it goes back to just unchanged on the day, which is, sometimes it happens, sometimes it doesn't, I don't make anything. And so buying support allows me to buy something where I'm going to know that I'm wrong right away. For example, we traded last week SJM, Smuckers. Well, the stock is down from 120 or so. It was, trading in the $107, $108 range, and we bought it. And the next day we got stopped out of it. It was a very small loss. It still hasn't, turned back up and made the move I expected to. And I'll watch it. I'll just have it on a screen, and, I'll see it. So, it gives me the opportunity to, if I'm right, it's great, and if I'm wrong, I'm right out. So, I'm just moving out quickly.
Wow. Yeah, that's amazing, that that little company in Melbourne, just north of us.
Oh, yeah.
Yeah, I mean, you figure recovery, my gosh, obviously Harvey with us, with Irma, and Puerto Rico's got to totally rebuild its entire system.
Yeah, and I think I mentioned it in the either in one of the daily notes or in the weekly strategies market letter. That I'm waiting for the morning that I wake up and come, get to the office and turn on the machine and see, they've been awarded, some monstrous size contract.
Sure.
Or,
yes.
Or that somebody else is buying them. I mean, both of those things could easily happen any day. But the fact of the matter is, if I would have bought it on the breakout at 5.25, I'd be profitable right now at 1.25, but I wouldn't be able to assess the risk because it could go down $1, $1.50, which is a gigantic number versus, on a percentage basis for the decline. But when you're in at 4.25, 4.27, I don't actually care what it does today or tomorrow, because first of all, I have a 33% gain in it that I have no problem with, and number two, it's a small amount of money. I think I only bought 1,000 shares, so in the $100,000 account, that's only $4,200, $4,270, and so I can sit with that and not have to worry about it. If I were buying the breakout on Apple at the announcement and their big event in September, I'd be out $5 here, and frankly, that $5 is not even meaningful in the price of the stock. As I said, with the market going up $150 yesterday, that was less than 1%. So, I can afford to sit with this, where if I would have paid $159 for it, I would have been tearing my hair out when it hit $150 the other day. I mean, that's a fairly decent size move in this stock. But as I said, it's really become more of a stock picker's market. And again, as Mike was discussing these food stocks with me, the only one that I found that looked interesting to me was Cal-Maine. The symbol is CALM, C-A-L-M, and they are the largest egg producer. And they're in other markets, but they are an egg producer. Well, I looked at it, and it moved with Sanderson Farms the same way that Tyson did. And on Monday, actually, while we were talking about it over the weekend, I happened to notice in Mike's coming earnings that Cal-Maine reports before the open on Monday morning. Well, the stock had closed 41 and change, and frankly, I didn't want to buy it up there because I thought it could go to 38, 38 and a half and still be a buy. Unfortunately, I wasn't quick enough because the earnings came out and they were somewhat of a disappointment. They lost money, although less money than they had expected, and Cal-Maine opened at 38.50, down 2 3/4 this morning. And then after the press conference, the stock was 40 and a half and was actually up on the day. And today it's 43 and a half with a high of 44.5.
Wow.
And so, but that gives you the rationale for why I trade the way that I trade. If I had bought it at 41 on the breakout at 38 and a half, I would have felt like an idiot. And here we are. If I would have bought it at the open, down at that support that I had discussed in the letter, we'd be up $5. Right,
I was going to say
$8.50 stock.
Wow, $5 a share.
5 on 38 is 15%.
Not too shabby. Wow.
No,
it's amazing.
So, that's kind of a thumbnail sketch of how we produce these trades for the market letter. And of course, we still have the two main rules in the options side, which, by the way, is up 159% year to date. We have these two rules. There's a 100% up rule where, if something goes up, an option goes up 100%, you have to sell half. So you're taking your money off the table. And the 50% down rule, which is if something goes down 50%, you have to sell the position, no matter, how much you like it or don't, or find the move unexpected. So, if I make the same number of trades that are profits versus the 100% rule and the same number of trades that are losses for the 50% rule, I'm doing okay. Because I'm taking twice the profit that I'm taking as loss.
Wow, that's amazing. And the name of that egg company, is it Cal-Maine?
C-A-L-M.
C-A-L-M.
They're the ones who have kind of the middle market, and I'm a shopper, so something I recognize. They have cage-free eggs, and they come in a clear container. And so they're not in the big cardboard container that you can't really see into, which are regular eggs. at, I don't remember the pricing, but let's just call it $2.39 a dozen. And the cow Maine eggs are probably $2.59 or $2.69 a dozen. And the organic ones are $3.69.
Whoa.
And so they're kind of in that mid-range where people don't want to spend, almost $4 a dozen for eggs. But the difference between the regular ones at $2.25 and the cow Maine eggs at $2.50 is not really an issue for them. And I'm not going to say I can't pass judgment on whether or not a free-range egg is any better. But it doesn't cost me that much to try and find out. It's
Sure.
an extra quarter a dozen is what, 2 cents an egg?
Yeah.
I can't be disturbed. I can't be concerned with that. And I'm making some of the effort. But yeah, cow Maine, CALM. We actually have traded cow Maine a bunch of times on the options side. But this was just literally, they must have started the conference call the same time that the market opened. So it was down before you could even turn around. It was 39.5, up $1 off the low, but still down $2. And the options don't have a lot of liquidity, so it's a little bit difficult to buy them and, again, to sell them at, a reasonable price. But, again, that just shows why the way that we trade makes sense, especially for small investors, especially for the options account where, in the SJM, we paid 26 cents for the calls. We sold, let me think, we paid 42 cents for the calls, and so we had to get out at 21. The morning that we got out with the loss, the stock had actually been up, and the options were 65.70. So they were almost to the 100% rule where I would have had to sell them. But because they don't have the same kind of liquidity that Apple calls or Standard & Poor calls, those kind of things, because they don't have that kind of liquidity, there were no transactions up there.
Wow.
Great. Oh, it's 65.70.
That's amazing. Wow.
If you don't want to pay 70, you're going to put in a bid. It's going to get lost in the trade.
Yeah.
Anyway.
Hey, Charles, I'm glad you made it through Hurricane Jose.
Yeah.
Oh, man. This has been a crazy few weeks. And, Mike, I'm glad you and your family are safe in Las Vegas. And we'll be talking to you guys next week. Money Info. Don't forget the newsletter comes out every Sunday night with Mike King, Charles Moskowitz, PrincetonResearch.com. Tremendous information. Wow, he's up 115% this year. That's all, huh? Wow. Amazing. This is WPSL Port St. Lucie, WPSL.com. Webcaster to the world.